The real challenge for the markets are going to be just kind of positioning now ahead of the Fed meeting. Of course, will they cut rates 25 points or 50 basis points? That's going to be the big question. Again, as we talked about before, probably going to be 25 unless the CPI report today is extraordinarily weak and suggests a much, much weaker economic environment than what headlines suggest. Here's what you need to know before the bell. CPI will have an impact this morning on the markets in particular, because this all is going to feed into will or won't the Fed cut rates this month. That meeting's coming up in the next week. Yesterday, the market rallied right to the 50-day moving average, so this is going to be the big challenge today. Now, this morning, futures are already pointing lower following the debate last night, and that suggests that we're going to have this initial test of resistance right at the 50-day moving average and fail. Now, unfortunately, that's going to put a little bit more pressure on the market to the downside as we continue to see this challenge. Again, we're in this correctional process right now. We're still on a sell signal. We are, kind of oversold. We did bounce off that oversold condition over the last couple of days. And as I said before, that initial test of resistance at the 50-day moving average was going to kind of be the defining moment for this potential correction process of whether or not this market can quickly recover, start working back up towards its highs, or if we're going to fail here and potentially come down and retest this 100-day moving average. It looks like, as of this morning, now the markets aren't open yet, but it looks like right now the markets are going to try to fail. However, saying that, again, we are early at the moment. This market could turn around here very quickly. If that CPI report comes in much weaker than expected, that could turn futures around and move the markets higher. So this market today, this test, this challenge of resistance right here is going to be supported by whether or not this inflation report comes in a little too hot or a little too weak. If it's weaker, we could expect this market to turn around and move above this 50-day moving average. That would be a positive sign. We'll see how we wind up today. We'll report back to this to you tomorrow on this. But this is going to impact. And again, as we've talked about before, volatility right now is really kind of the big driver of the markets. And again, we haven't seen a big pickup in volatility. Again, there's not a lot of concern in the market. So this was that decline that we had previously where the market sold off. This was the Japanese yen carry trade blow up. We had that big spike in volatility for one day. Immediately, volatility came right back down to its lows. We've had a recent little pickup in volatility here during this correction process, which you would expect. But again, not to any great degree. We're currently trading right around 19 on the volatility index. Again, if there's not a lot of concern in the markets right now about a decline in the markets to any great degree. But again, if something happens here that could certainly shock the markets, like that Japanese yen carry trade example, that was an unexpected exogenous event. That created that volatility spike. We don't really have anything like that in the works right now. So the real challenge for the markets are going to be just kind of positioning now ahead of the Fed meeting. Of course, will they cut rates 25 points or 50 basis points? That's going to be the big question. Again, as we talked about before, probably going to be 25 unless the CPI report today is extraordinarily weak and suggests a much, much weaker economic environment than what headlines suggest. They could cut more, but I don't really expect that to happen. The other big outlier now is going to be the election. Just positioning before the election, as we've talked about previously, markets tend to correct going into that election, and we're in that time frame. So just expect a little bit more volatile trading here over the next, really kind of couple of weeks until we get into October. Then things should start to settle down just a bit as we start getting back into earnings season. That's what you need to know before the bell this morning.